Hello traders, welcome to my YouTube channel once again. My name is André Cardoso. Thank you for being here. For those who are here for the first time, I welcome you into this long-term process of trading advanced pattern formations. So that being said, I want to share with you for today my vision for silver. One of the reasons is because I'm holding my longs and I still believe there's room to trade higher with silver without ignoring the variables that the market is offering at this point. Obviously, I trade based on those criteria and I trade based on the patterns the market tends to produce. And that being said, I'm here today just to share my views and to get your feedback also for potential new highs on silver. So I want to share with you and to talk about this potential and orthodox, let's call it an orthodox inverted edge and shoulder. So usually we tend to search for those events on different price structure levels, usually at the top of the structure or at the bottom. We have the price finding support at the 50% Fibonacci retracement, failing the 200 daily moving average. So I will not ignore that possibility for the market to actually to retest or to find some pressure at that daily moving average. But at this point, this is what I see it for a silver kind of. Let me change this into a line chart. I believe it will be much easier to tell you and to share my view here. Oops, what I've done there. Okay. So we have this eventual next zone. Usually we tend to search for horizontal necks. That's the truth. We usually don't search for a next zone, one ascending next zone or a descending next zone. Usually we like to search for those next zones being clear and with the price finding nice in this case as an inverted edge and shoulders resistance with an horizontal next zone. So we are not too far away from an horizontal next zone, but obviously that changes the price behavior. But I will not ignore this as a potential inverted edge and shoulders or even a cup and handle formation. So the market is trading higher, and I will not ignore this as a potential cup and handle formation, and now the market's building the handle. It doesn't matter how you see that pattern because they will target the same price level based on the Fibonacci extension, which is a 200% Fibonacci extension from these lows, these highs to these bottoms. So actually, if we had an horizontal next zone, we had a clear picture of what to measure to project our targets. Since we have one, let's call it an ascending next zone, so ascending because we have an ascending trend line resistance there. We usually I suggest to use the higher close level to project the price. So basically I will use these lows to these highs, and I use the 200 moving average, the 200 Fibonacci extension as my default projection, well, for the pattern. So for a breakout above the broken neck, so let's call it a broken neck, a projection above the broken neck. That's what I mean. And well, we have projections above the monthly fractal resistance for silver, so let's not ignore that level above. So I see this as a potential heads and shoulders. That pattern will only trigger above this trend line. If the market decides to break above this, and be careful because we have a weekly resistance there, okay? We have a weekly fractal resistance there. And that pattern will only trigger above this structure resistance. So if we connect those lows, this may end up forming the so-called megaphone formation. Usually I see a 5-wave structure inside this structure, so there's a lot of price behavior that can form the pattern, and a lot of price behavior missing if that's the objective at this point, to form this megaphone formation inside this major, let's call it a major sideways moving process. If that happens, that will take some time to process, and that eventually that's a top here, and eventually we will see the price falling and searching for new supports below at that trend line. But we never know what the market is offering. It's printing or will print. We know what the market is printing at some point, but we never know what comes next. But again, eventual cup and handle or edge and shoulders formation, projections for that pattern above the monthly fractal. I have patterns also, we have harmonic patterns projected above, and the one nailing the previous Fibonacci extension, golden Fib. So this is this red Fibonacci, golden Fibonacci extension is an extension from this very last swing low projected above. So that completes the bearish shark pattern, the bearish crab pattern, I'm sorry. I shared this pattern before the market, to actually right after the market prints a pattern, or a few points before the pattern gets completed. I can't remember at this point, but the market has entered into this bearish swing, and it has found support at one of the Fibonacci target zones at the 50% Fib. So then we enter inside this sideways moving process, but not before. We can call this not before printing these false breakout below this previous low. So this left shoulder, and eventually this kind of it's not a technical double bottom, but we can, some of you eventually are considering this as a double bottom. It's not a technical double bottom, but it's a false breakout below the previous structural lows, which may trigger more upside momentum. And when I see the price breaking above the previous structural resistance, I start to project that shark pattern at 1/600 extension. So we have also the golden Fibonacci here as resistance, making some pressure there, which opens the door to form other patterns actually at the same price level. And if we consider all this bearish swing and the bearish and the bullish retracement, we are already trading the 50% Fibonacci here. So the 88% Fib actually, and because we have the golden Fibonacci there as resistance, I will not ignore that, the possibility for an extension to the 127 extension from this very last swing the market has offered. So from this weekly support to the weekly resistance, the 127 extension from that swing projected above, that will complete also, or that may offer some pressure there between the 127 and the convergence between those Fibonacci extensions, different extensions nailing exactly the same price level. So we have two different possible options there. If the market fails to find some pressure at those levels, I will not ignore an extension, and eventually with a false breakout above the monthly fractal with a 113% Fibonacci at 2005, very close to the default target above a broken neck for these eventual edge and shoulders, and If that fails, so let's call this a cluster zone. We have two different zones here. One of them between the 88% fib, the 1929, so between the 88% Fibonacci and the previous structure high, let's call it those previous highs, but we have the 127 in the golden Fibonacci extension, so we have that first box there that should offer some pressure. Eventually, you can extend that box to the 113% Fibonacci because we know that that level may act as a potential pressure level for eventual false breakouts above the monthly fractal. So just to hunt those stops positions right above. And if those patterns fail as for a major pullback, so what we expect from the 88%, we will expect the market to come back, to pull back again, and eventually to retest that fib, that fractal. Let me use the Fibonacci retracement to measure those eventual targets. But exactly, so the 88% fib, the market needs to pull back to the 38% Fibonacci, retesting that daily fractal at 18, 17, or very close to those levels. So we can expect the same from the 113% fib. If the market decides to trade above, we can expect the 200 moving average, the 200% Fibonacci extension, because that triggers, if the market decides to trade higher or above that structure, that triggers the heads and shoulders, and that is also the default projection for the pattern. So we have a confluence between, or another cluster box or a smaller box between the 113 and the 200% Fibonacci extension. And if that fails, including the 224% Fibonacci extension, but that belongs to the shark pattern that I showed you before, not for this sequence. If that fails, eventually we will see silver trading much higher, 21.57, 168 extension again. So the same level the price has respected previously. Eventually we will see the same price level acting as a pressure element and forcing some pullback eventually. We never know. So there are those three levels between the 88% fib and the previous structure highs. A few points above, we have the 113% fib and the confluence between, or a cluster between the 113 and the 200% Fibonacci extension. And if that level fails, and if you want to short the market at those levels, obviously you have to protect your position with stops above. But be careful, because if we start to settle above the monthly fractal, I will not ignore the possibility for an extension, and if that happens, that will also may print as the bearish crab pattern extended at those levels. So basically we wait for the breakout of this trendline resistance that may trigger the edge and shoulders formation, or the eventual edge and shoulders formation, and that eventually may trigger more upside momentum, and more people will start to engage, expecting the market to trade much higher. Let's wait and see. So, but this completes this video. I hope you enjoy this sequence. Let's hope and see. Let's not pray, because if we pray, the gods know nothing about economics. And if we pray for the markets, most of the times you lose your trade. So I always suggest to find your trade, measure your reward, measure your losses. If that works, if that makes sense for you, engage the market and get involved. If it makes no sense, avoid it. Search for another event, the one there's always one event calling for you to trade, and you need to find that swing, that momentum, and that pattern to trade. So don't rush inside the market. Identify your pattern, measure your risk reward, and if it makes sense to put your capital at risk at that point, just do it with confidence. Um, and that's what I have to say for today for the silver chart. I hope you enjoy, without ignoring, obviously, because you understand my bias is now it's bullish. I still holding those longs. Um, do not ignore the possibility for a breakout below that daily fractal. If that happens, I will start to think, um, eventually eventually I will close my positions, because eventually I don't want to hold, um, that eventuality of a retest of the weekly fractal. Obviously, take that in consideration. The market, we never know what the market will do. But again, this is my view, and for now I'm paying attention for these inverted edge and shoulders formation, and again, daily and weekly fractals are crucial. Let's see what the market will offer us at this point. So that's all for now. I hope you enjoyed this video. If you do so, please press that like button. It's always important for me to get your feedback. For those who are here for the first time, I hope you enjoyed this video. Just try to follow my work on socials, as on Twitter and Facebook, more on Twitter for sure. Um, and here on TradingView, obviously, I publish some charts here on TradingView. Not so often, but sometimes I push some patterns there, and this was just one example of the most recent one that I was expecting to be formed around these levels for the Bitcoin. So the market has found some interesting pressure there. It has started to fall, but it is far away from the default targets at this point. We still need a few more points below the recent lows on Bitcoin to achieve the default targets for that pattern. But I sometimes I publish some charts there on TradingView, so if you want to get a look on my profile, you can do so, and that's it. That's all that I have for today. Have a nice and wonderful weekend for all of you. All the best for you and for your families. Safe trades for all of you, and see you the next time.